Test, test, test. Seems like I'm running into some issues here. I want to make sure you can hear me. Sounds like I need to start over. Unfortunately, my Google Hangouts selected the wrong news source or the wrong audio source instead of my microphone, and I think it should be fixed at this point. So let's do this again. I'm sorry about the issue here. Again, real quick, German factory orders came in much worse. UK September industrial production came in at 0.6 versus 0.4. September manufacturing production came in at 0.4 versus 0.3. Both UK numbers are strong. The US dollar yen surged to a 7-year high, up to 115.50 and dropped 100 pips. Initial jobless claims came in at 278,000, stronger than 285 expected. Continuing claims 2.348 million versus 2.36 million, also stronger. I want you to note that the continuing claims number is the strongest it has been since December of 2000. Again, continuing claims, strongest number since December 2000. ECB's Draghi reiterates it's too soon to start buying ABS. Asset purchases and TLTROs will push inflation back towards target and also have a sizable impact on the ECB's balance sheet. He expects asset purchases once they start to last a couple years. He's still talking. Looking ahead, it looks like we have the Euro area finance ministers meeting in Brussels going on. That's starting right after the conference here. And then for the rest of the day, it's very, very light. 9:30 natural gas inventories. And then at 9:40, we have Fed's Evans. At noon, we have Fed's Powell in Chicago. At 1 o'clock, there's a hearing on the U.S. government's response to the Ebola outbreak and steps to mitigate. At 6, Fed's Messer speaks in New York, 6 this evening. And then at 6:30 Central, we have the Reserve Bank of Australia statement on monetary policy. Let's have a look at our charts. Again, I apologize for the wrong feed coming in through the microphone here. So let's move to the technical side of things. Again, a review of yesterday. Yesterday's expectation was that the market's likely to continue higher eventually. However, we were in a gap zone. The expectation is that we would probably have some responsive selling, seeing, and I said there's a fair amount of support beneath us. Expected 2011 to act as a pretty strong support. And what the market did is it opened. It tested the overnight high, which actually popped up right before the open. I did see it pushing through the 2019.50 high that was there while the trader rate was going. But the primary hypothesis is for it to test lower, find support, push through the overnight high, and continue higher towards the 2022 area, which is the next measured move. And so what it did, though, is it executed hypo 2, then hypo 1. It pushed through the overnight high early, and hypo 2 was expected to see responsive selling back into the prior day's range, which it did. But it did find that support we talked about. It pushed all the way down to value high from Tuesday, right here at 2009. It went to 2008.75. It pushed it by a tick. Market's been one ticking short, too short, too long, a lot these days. It's a further sign of an orderly auction. I like that. And then it basically was pretty balanced for the day. Required a lot of patience. You could see that there's a nice belly to the profile, a very Gaussian or a normal distribution profile yesterday, um, with some pretty contained trading. Normal variation day down. It did make it all the way back up to the opening print on the close. Yesterday traded a fairly normal volume for the day session, 1.32 million, and a fairly normal range for an up day. So what we have is a market that is definitely holding on to higher prices and is experiencing fair trading at higher prices to a 2015 quarter being the POC. So you can see here that it's made highs, but it's holding on to those highs here. So for that reason, we're in balance. We extend out this profile, and we can see that 2012 is now the most traded price, but there's a heavy cluster between 2012 and 2006 with a lot of volume going off in this range. This is what the market currently considers to be value and where trade is being facilitated the most. So yesterday, Hypo 2 worked out. Hypo 1 did not. Hypo 1 has been spot on for quite some time now, and relinquishing its title to Hypo 2 yesterday. Let's look at the long-term profile. The long-term profile shows what looks like a raging push-up from 1813. We have a lot of gaps that we left behind, a lot of weak structure. When I look at the profile from the low to yesterday, let's color that something different here. When you look at this red profile, which represents everything that's happened on the way back up, you'll see some really clear, I love these, by the way, these are great opportunities. Some really clear low volume nodes, areas where the market did not want to trade. So what the market's done is it pushed through to the peak, to the value. We have a gap here, no volume. And then we have some turbulence in this area as it traded over itself, but still made a higher low, higher low, higher low, higher low, higher low, one-time framing up. Another small gap right here in the 6150, 60 area. Our next balance area. So you can see these balance zones that I've got drawn here from there to there. It goes LVN to LVN. The next balance zone, these 2 days almost act like a balance zone with this, but LVN to LVN and LVN to the bottom. So on the way down, we have some very clear structure to work with the latest balance here at 94 quarter, which we missed by 4 ticks on Tuesday, and then yesterday's bar. If you ever look at candlestick patterns, yesterday's bar is a hammer. The market tested below, did a thorough test into the prior day's value, and got rejected and finished near the highs, almost a doji. This is fairly bullish, especially at new highs. I think if you're still thinking short, it's just not wise to have naked shorts on at this point. I think paying up for a little bit, paying a few points for insurance through options, especially at the VIX being as low as it is, volatility being as low as it is, with insurance premiums being lower, I think it's just wise, if you're going to take a swing short position, to buy some insurance and then take that insurance off. It'll be worth something when the market goes in your favor still, and just buy that insurance back, or sell that insurance back once the position starts working in your favor. It just seems like being naked short is not a wise thing to do. Quick look at the US dollar. This thing's been on a tear. It had a small pullback through that drop in October. But look at this thing; it's pushing new highs for as far as this chart goes back 1,000 days. Pushing new highs on this ECB announcement. Big move on the dollar here, very unusual, and we see the equivalent in the euro. So lots of volatility on the ECB announcement, as I'd said earlier this week, that we're really looking for a mover on the ECB. Remember, the Bank of Japan had decided to intervene. Riksbank of Sweden has dropped rates already. The UK analysts for the UK, the Bank of England, who are very gung-ho about the Bank of England increasing rates the first quarter of next year, have pushed those projections back. The world central banks have become more accommodative. Also, China has injected more money into their economy, trying to get some fuel into the fire there of growth. So overall, in addition to that, I wanted to show you the real movers. Here's the DAX. Here's the DAX from a low of 92.85 to a high of 94.69 on that announcement. The DAX is worth about $32 per point. And you can see here it's moved almost 200 points per contract, 200 points per contract, $32 a point. That's a lot of movement there. So the European markets have responded very well to Draghi's comments and are pushing and have been pushing up. Euro Stoxx 50 has had a 100-point range, almost 100-point range here, and that's unusual for that product. That's more of what the DAX does. This product's worth 10 euros per point, or about $12.50 per point. Great products to trade, by the way. They have lower fees. I would not recommend trading the DAX unless you have a large account and really can control your risk. Looking at the overnight session, pretty decent rotation. We've had about a 10-point pop on the news from the ECB. The market is working its way back towards the scene of the crime, and I expect it to continue to walk back. Essentially, we had a gap up for a point at a point, and now it's back to where it was pre ECB announcement. The market seems top heavy right now. The way it's trading, it's definitely pulled back lower much faster than it's moved up. And so the expectation for today is more of the same. I expect that buyers will battle this out. I expect the trade today to be stuck in yesterday's balance zone. The market clearly liked these prices. We have a taper. At the top, not a great one. At the top for sellers, the market's showing no interest from buyers at these prices, and the market shows tapering interest from sellers at these prices, with both parties agreeing to be in between. So today, the value area of yesterday is key. I'm looking for some responsive selling towards 2015-25 as the primary hypothesis today, and it's very, very hard to predict what is likely to happen next. We do have some areas below that that could be tested. Today may see some selling coming in. Finally, we have probed, like I showed in the overnight session, we have probed higher, and we have come all the way back to where we were in value yesterday. So below 2010, I think we'll see some pretty decent selling back to 2000 quarter. That's my primary hypothesis. I'm looking for responsive selling back to 2015 quarter, and for it to test through to 2012, which is the MC point of control, and then to continue lower towards 2006.50 today. Again, my expectation, my primary hypothesis today is for it to try higher, fail, and continue and start to move lower. I think the market's a little bit extended. And that's what we've done, is we've made new highs and pulled back. New highs, pulled back, and here we are at new highs again. The second hypothesis, of course, is to test lower again, and then find buyers, motivated buyers come in. This is unlikely today, but we'll see. Find motivated buyers to start moving back up. I have updated my measured move study. Here, the next measured move up that I have is 22.75, and then I have a gap here in measured moves up to 20.50, 20.55. There's a lot of confluence up higher. 20.50 has two measured moves, one from back here. It's got one at 20.50 and 20.55, then 20.62, and then up here we have some confluence, 21.50, and the area between 2192 and 2200. That's quite a bit away, but this is what we've got so far for targets above 2022.75 being the first target I see on a measured move up. Okay, keep an eye on crude oil today. OPEC's come out with their supply outlook, and it's pretty bearish. So it's interesting. Crude oil is again off $1, over 1.5%. Has pushed down to 77.41 and is trading 77.60 this morning. So it's just a little bit off of its one rotation off of its lows. Crude cannot catch a break. And of course, that has an influence on the price of products and overall inflation. I think it creates a bit of an issue at these prices or lower. It creates a bit of an issue for these central banks trying to prop up inflation. Anyway, I hope that covers it for you. I'll be doing one more Trader Bite tomorrow. For Stage 5 traders, we'll be doing our webinar, our Ask a Question webinar tomorrow as usual at noon, and covering the pop quiz and stuff. But after that, I'm going to be in India. I'm leaving tomorrow night. I'm going to be in India for a couple weeks and will not be around much. I'll try to pop in and participate wherever possible. Good luck today. I wish you the best, and I'll speak to you tomorrow. Sorry about the technical issues earlier. It's hard to see what's being broadcast until I hear complaints. Take it easy. Bye.